US indices traded with bullishness throughout the week, but towards the end of the week, we have seen signs of exhaustion here. Yes, specifically, we have seen a very good correction in all the three indices, and in fact, the US 30, which has hit the highs at 45,050, has shown a sharper reversal, and S&P and Nasdaq were not too far behind. So, what to expect in the coming week? Big week ahead. We have this inflation data, which is going to be definitely watched out for towards the middle of the week, and then Chairman Powell's testimony to the Senate and the House. These are going to be the driving factors, and definitely not much of volatility can be expected. What to expect, where to enter, where to exit, how to profit trading these three major indices in the coming week, we are going to see with the help of charts and indicators. This is a weekly review, and I do share my twice a day updates with precise targets for all the three major indices. Subscribe, press the bell icon, do like, share, and comment. Join the free Telegram channel for live updates and join the channel memberships here on YouTube to support the effort. Let's start. First, we'll look into S&P, followed with Nasdaq, in the end Dow. Now, first, let's have a look at the weekly charts. What's happening repeatedly here on the weekly charts for S&P is it is taking the support here from the 50 period and trying to bounce back. This time again, it has taken the support and it has shown a very, very good rise. But notice one key observation here. Look at the highs. These are beautifully aligned and you can see lower highs are done. It suggests that the prices are not willing to stay beyond 6100. Now 6100 has become a definitely key level for S&P 500 to break past by, while on the downside 5900, 5880 has become the support here. Now look at the formation: rise, one red candle, then a candle which is of swing in nature. It has opened at the bottom and it has seen the swings here. So in the coming week, it is definitely important to watch out whether it breaks here on the upside, that is 6100, 6120 or not, because once it breaks past by 61, 6120, we can look forward to the next round of rise, which is going to take it towards 6200 or plus levels. But right now, I'm not in favor of such a stronger rise here. Thus, you have to watch out how it behaves in and around this zone. Else, a drop below 6,5980 should take it towards 5900, 5880. And once it trades below the 20 period, specifically below 5900, 5880, you can say this is the time for markets to take a greater correction. See the rally here for last few months. You can see where it was towards the end of 2023. See, it was at 4100 in the end of October 2023, and it has seen a 50% appreciation in just 14 months. Now 50% appreciation in 14 months do not it is not recommended, or I will say it is not sustainable. That is what it appears, though it is rallying as of now, but it is also leaving a long gap on the downside for it to cover. So let's watch out the direction it takes in the coming week. Any drop below 5880 is anyways is a good sign for a clear reversal. Look at the extreme divergence it is showing here. Too much of divergence calls for it to converge soon. Stochastic rising here, looking upwards, but look at MACD. Three top here, triple top is done, a crossover, divergence. Now this divergence is a sign. Look at the space on the downside it has. Look at what has happened here. It can replicate the same. Yes, it can replicate the same. What has happened? We have seen a sharp correction of prices, and thus sharp correction of prices here can be expected as well. RSI has dropped, again slight bearish sign. On the daily charts, yes, this is the same observation. Notice lower highs here, the week closing, the candle at the bottom here on the daily charts. Very important to watch out where it initiates the next week. Any drop below 6010, 6000 should be a very good indication that we are looking forward to the lows here, and any drop below 5900, 5880 is a clear sign of more correction, where 5840, 5800 should be seen, and below that we can see a greater drop here. Notice what is happening: rise, retracement, rise. It could retrace, but only and only if it trades below 5800 in the near term. You can say now the bears are back in. Stochastic rising here. The MACD has just crossed over, trading with moderate divergence, moderate bearishness. RSI has dropped. Coming to the monthly. Now look at the monthly charts. Look at the preceding two candles, three candles. See higher highs, lower lows. Now this is the first red candle. This is a swing candle, and current candle is starting up with the lower highs. We can now expect lower lows in the month of February itself and initiating the process of reversal, as this will become the first red candle, and then from here the reversal process in indices might begin soon. So you have to be very very careful. The coming week is going to be one key driving factor. So far, it is respecting this bullish channel. The lows of this channel should be at around 5700, 5600 zone, while the 20 period moving average 5400 should be a very good support. See, months of rally retracement, months of rally could invite the second round of correction here, where the prices are going to head lower. Let's see. The coming week is going, and the month of February is going to be the decision maker. Stochastic overbought. The MACD is in green. It is at extremes. It is trying to converge, not yet crossed over. It is at extremes again, though it can stay at extremes, but even if it tries to converge, means couple of red candles, means it is going to trade below 5700, and then below that a massive correction should be seen. RSI overbought here. Now considering, let me give you the trading levels and strategy for the now on the buy side. I will recommend it to be at 3032. The key levels you should watch out is around 6050, 6064, 6085, and 6100. These are the four key levels which are going to decide the future of S&P here. Any move beyond 6100 should take it towards 612442 zone, and then you can look forward to a greater rise here. The bullishness might increase as in how it breaks past 6124, 6142 zone. You can expect 6155, 85, or 6200 levels. Though, as far as my expectations are considered, I do not recommend such stronger momentum to continue here. On the downside, I will recommend a sell at 6018. Be careful here at 5995, 5980. Very important support levels here, because once it stays below 6000, increasing bearishness to be seen here. Below 5980, chances will be high that we may see 5950, 5935, and then 5920 levels. Now these are going to remain the prime support levels here. Every support level is pretty strong here on the downside. And remember, once it stays below 5900, 5880, I think we are waiting for a greater price correction, greater crash here, where 5800 to be seen very very soon. Take your positions accordingly. Let's move to Nasdaq 100. And before we proceed, if you want to learn this art of trading, join my mentorship batch. And if you just want to trade as per the signals, be a part of my signals channel on Telegram. Connect with me, write an email, ping me or Telegram for your queries. And if you're looking forward to a broker which offers you a swap free account with lowest spreads and no hidden charges, easier transactions and easier withdrawals from across the globe, you can find the recommended broker link also in the channel and video description. Look at the weekly charts for Nasdaq 100, similar to what we had seen for S&P. See where it was at the end of 2024 or 2023. You can see in the October 2023, the prices were at 14,000, and now we have seen it hitting 22,000 levels, more than 50 to 60% rise here. Again, not sustainable. What we had seen for S&P is applicable here as well. Look at the formation: rise, retracement, 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 retracement. Now every time it has moved close to 20 period, it has taken the support and bounced back. Now again the same is happening. It has taken the support and trying to bounce back. But notice the movement for the last few candles. What is happening? It is struggling to break beyond 22k, and thus the coming week is going to be the decision maker, because if it, and only if it trades about 22k, you can say now the bulls are taking over and you can look forward to a rally here. Else what is happening? Consolidation going on the down, 2800, 2600, on the upside 21,800, 22,000. So this is the zone which is proving out to be a very critical zone for Nasdaq 100 to break past. And it has closed almost at the median here at 21,500. So we have to wait and watch where it moves. Any drop below 21,200, then 21,000 and 2,800 should be a very good indication that the bears are taking over. Remember, couple of bullish candles, one red candle, one swing candle. The next candle might gonna be a strongly bearish candle here. Be watchful of this. Stochastic rising here. Now look at the MACD on the weekly charts, just crossing over here at the peak, and possibly, see, this is the fourth time it is crossing over here. This suggests that there is lot much of downside available. See what has happened here: 1, 2, 3, and fourth. After fourth time, it has not seen a reversal. After fourth time, it might not see a reversal. What preceded this was a stronger rise. What followed this was a stronger correction. What preceded this was you can say further stronger rise. What could follow could be a further stronger drop. Be mindful of this. RSI has dropped here. Coming to the similar observation here. See the rise and the retracement. Now the run is pretty strong. it could start to retrace. And see this. This is how it is doing. Possibly we may see a correction beginning here. Right now it is not showing any such sign. Look at the two candles here, the last two candles, see preceding two candles delivering lower highs, lower lows. This month it has already achieved lower highs here, and it is struggling to stay above. So only bullishness in tech 100 for the month of February and for the near future is only and only if it breaks past 22,000 levels. Else lower highs are done. What we are waiting for is now lower lows here, where the prices are going to move towards 20,500 lower levels in the month of February. Remember, it is trading with too much of divergence here from the 20 period. It can show you or signs of convergence very, very soon. If you look at the stock, I see this is also overbought. The MACD is trading with extreme divergence and bullishness. Potentially, it has to converge, though it is not yet showing any signs of convergence. But this is definitely at extremes, and the RSI is at extremes as well. Coming to the daily charts, when you look at the daily charts, what is happening? Look at the formation here, almost forming a twin peak. It is now reversed. This is the first red candle, and the first trading session coming week is going to be of prime importance. Any drop below 21,400 and 21,300 should be an indication that we are looking forward to a greater price correction, where 21,000 or in fact 20,000 uh 500 600 levels to be seen very, very soon. It is right now I can see is staying in the box, and it has to come out of this box in order to take a direction here. Stochastic rising, MACD almost comfortable, and RSI looking downwards, which is a sign of bearishness. So looking at this, let me provide you the trading levels and strategy. And before that, do not miss to like, share, subscribe, and comment. Join my mentorship batch or signals channel. Now, considering this, first let's talk about the levels. Now look on the down. The first, let's talk about the levels to buy. Yes, you can initiate a buying entry at 21,500, but 540, 600 key levels here on the upside. Very strong resistance, 710 and 800. 800 is the next milestone, which is going to play a major role in the further direction for Nasdaq 100. Beyond 21,800 is where the bulls will be taking over. You can expect 840, 860, 920, and 22,000. Beyond 22,000, sky is the limit. Close your eyes, stay bullish. 22K is on the cards. While on the downside, I will recommend a selling entry at 21,440, expect 21,400, 380. Very good support zone here. Then 300 to 80 next, 21,200, 21,000, 2,800. These are now, see, every beyond 21,200, we are going to look at tremendous bearishness towards 21K, 2,800, or in fact lower levels. Thus, you have to play with caution, specifically on the upside. Yes, the bulls appears to have exhausted. We can see a potential reversals. Take your trades accordingly. Let's move to Dow Jones. See, US 30 has shown signs of exhaustion. US 30 has cleared that it is very difficult for it to stay above 45K. And see, after diminishing bullishness, it is showing now a reversal sign. And now any drop below 43,800 in the coming week is a clear sign for you to stay short towards 43,400, 43K. And once it trades below 43K, see, this is a double top which is done. We are set for a reversal. The next destination is going to be towards 41,800 and 41,000. Though right now I can say it is very difficult and very early to conclude, because see, it is still staying in this bullish channel, and as long as now 42K, 41,800 is not taken, I will not treat this as reversal. Also notice US 30 has seen a very stronger rise, and now this time if you see it is staying below 41,800, 42,000. Remember, we are ready for a round of drop towards 40,000, 37,000 and lower levels, but right now it is too early to conclude. And I can say a breakout beyond 45,000, 45,050, it is not going to come back down again. Remember, beyond 45,000, 45,020 and 45,200, you have to just stay bullish. See, the stochastic here is overbought. Look at the MACD. See, this is crossed over at the top. This has tried to converge but failing to cross over. Now it is ready for a round of correction. See what has happened here. It has converged but failed to cross over, and then this dip is seen. Now this crossover is again coming at a higher levels. It has converged, and now this is the time for it to again show the correction here. RSI has dropped. Coming to the look at the monthly charts, what it has done. See, observe closely for the last four candles. The highs are pretty much beautifully aligned. I'm not speaking, the charts are speaking on its own. Now, notice what has happened for the last few candles. One bigger bullish candle, one bearish candle, again a bounce back candle with almost flat top and low lows. Now, the current candle could be red here, which means it can potentially drop towards 42, 41,800. And this time, if it drops below 42, 41,800, the direct landing should be between 39 to 40K levels. Below that, you can expect a greater price correction to follow. Stochastic overbought trying to look downwards. MACD extremely bullish. It must start to converge crossover for a sell. The second wave here is done, and now it is time for it to move towards the bottom. The RSI is at the top as well. Coming to daily, look at the daily charts. Double top is done. It is starting to reverse again. Till 43,800, do not read this as bearish. Below 43,800, chances of reversal will be less. You can wait for 43,400, 300 zone, 43,000 levels, and then below that it is going to show a tremendous move towards 42,600, 500, 42,000 levels very soon. Notice drop, consolidation, rise, drop here is possible, where we are seeing a move towards 42, 41, 800. Stochastic looking down. MACD has crossed over. Good sign for the bears here, looking downwards, and RSI is dropped. So it appears that the signs are pretty much comfortable or pretty much indicating towards a bigger drop here. But stick to the levels. My observation are just mine. The charts are bound to make you confused. And now what appears to be a bear case can reverse, and just a favorable data can take the prices towards the. Take your trades accordingly. Now regarding considering this, I will recommend, now on the downside, see, first buy side I have mentioned 44,350 you can buy, but 44,400, 480, 500, 600, 750, 840, these are going to remain the key levels, and the most important one is this. And if these levels are taken, I think you should not think of selling US 30. You can stay bullish. You can expect a rise from here towards 45, 200, 45, 500. Chances for which, as far as my opinion is concerned, appears to be very less. While on the downside, you can take a selling entry at 44,250, and then you can expect it to correct towards 44,180, 44,000, 43,800. Remember, once it drops below 43,800, the drop is going to be sharp. The drop is going to be swift here towards 43,450, 200, or in fact 42,800, and lower levels are possible here. Yes, once it starts to correction, we can look forward to a greater price correction. Be mindful of this. Take your trades, take your positions accordingly. Like, share, subscribe, and comment. Join my mentorship batch, join my Signals channel. Reach out to me for your queries. Join the free Telegram channel for live updates, and the channel memberships here on YouTube to support the effort. Do not miss to watch the twice a day updates, which gives you a fair bit of idea on how to profit throughout the day trading US and indices. Take your trades accordingly. Have a great profitable trading weekend and a happy weekend.